Well, happy Monday to you. I'm Marlon Bowling with you here on the Market Day Report as we get ready to open up our trading week. And of course, last week we had all kinds of adventure in the grain markets, a lot of it weather related. And it appeared on the surface that we may have had more of that already in the Globex trade overnight. I know I looked at that Globex market not long after it opened last evening. A lot of pressure on all the grain trade overnight. Then I came into work this morning and now everything was well off of those lows. In fact, Minneapolis wheat was higher. So let's bring in Rich Nelson of Allendale Incorporated in McHenry, Illinois to take a look at the market activity. And Rich, a bit of a bounce here overnight. Early on, it looked like if you just went by the market activity, it looked like maybe a wetter forecast had been at hand. But now things changed by the time we got into the morning. Any idea why?
I think a lot of people are wondering about this whole situation these next few days. We do have, as we heard here just before here, a few extra rains lined up for the north and northwestern portion of the Corn Belt here, but most areas will be seeing that drying as a whole for this week. Next week, maybe some normal rainfall slightly above, and then the week after going back to below normal precip. So I think right now, as they're still right in the heart of pollination, I think the trade is still quite concerned here about potential yields up ahead here after all these rains these next few weeks here.
It appears that maybe traders were caught a little off guard by the latest CFTC Commitment of Traders report. I understand that those big commodity funds that everybody likes to watch to see what they're doing, they really acquired a bunch of long positions last week when the market really sold off. Were you caught off guard by that too?
The size of them here, no doubt. Certainly on the soybean side, where they saw over 89,000 contracts of net buying from the previous Tuesday, actually Monday the 3rd, to Tuesday the 11th. So 89,000 contracts in soybeans. That's the single largest week of buying since this particular data set started back in 2006. So as far as the soybean side, definitely a good surprise by Friday afternoon's report.
Okay, now I want to have you comment on this. That report goes up to last Tuesday, like you say, but the sell-off occurred on Wednesday and Thursday, though. What happened there?
I think on this one here, the trade's probably assuming we have gone back to probably a net short position. So all that buying through last Tuesday, the 11th, got them to a net long position of 19,000 contracts. But obviously, with the setback here since then, we're probably back to a slightly negative number as far as our net position. In terms of the next few weeks, keep in mind, we probably need to have this move back up to about 100,000 contracts net long to get this market up to around $11 or $10.75, where most people want to do a lot more selling. So for right now, great to see, but definitely not enough to get this market excited here.
Well, we've certainly had a bounce in the overnight trade in the Minneapolis wheat. That spring wheat still seems to be a popular contract that folks like to pursue right now. Is that something that you see continuing for quite a while?
Yeah, I think for the very short term, meaning the next week or two, I do think so here. One thing to look at regarding this situation, this afternoon's crop progress report could show yet another change as far as the spring wheat conditions. We started the year off at 62. As of last Sunday, we're up to 35% good to excellent. We're probably going to peel off another 2% here on this afternoon's report here.
And the soybeans are approaching that critical pod filling time. We're only a couple of weeks away now.
That certainly is a great point here as we get to the latter part of July and into August. This is now definitely a soybean yield-setting time frame, so all across the board, corn, soybeans, wheat, this is a pretty exciting time for us here.
All right, Rich, I'll bring you back here in a little bit, and we'll talk about our livestock trade. That was fairly active in its own right here last week, and we'll talk more about that in just a moment. Our guest is Rich Nelson. We'll have more with him when we come back. Well, we're talking with Rich Nelson right now. He's with Allendale Incorporated in McHenry, Illinois. Did want to take a look at our livestock trade here in just a moment, but Rich and I were just talking during the break that we have a report coming up here in a little bit later on this morning that might be of interest to our soybean producers. Rich, you might shed some light on that.
Good point here. The 11 o'clock Central Time NOPA crush report, the Private Industry Association, they're expected to show 143 million bushels of soybeans processed here last month. That would still probably be a disappointment, 1% under last year. To hit USDA's goal for the next couple of months, we'll have to run 2% over last year. So we'll see how that turns out here.
Okay, so let's look at our livestock trade now. You talked about the Commitment of Traders report and positioning of the large commodity funds on the grains. What's been taking place here on the livestock side then?
And there has been a lot of interest for this side as far as the cattle numbers here. We saw net declines here, net selling through last Tuesday, 38 to 62, so 3,862. Still brings these funds to a net long of just under 115,000 contracts, a bit off that spring high, of course. As far as the numbers on the hog side, we did see a net buying week last week, yet again for what's this been like 10 to 11 weeks in a row. 65.78 in terms of the contract buy, puts them at a net long position right now of over 84,000 contracts for these hogs. Definitely a good number, not seen here for a couple years.
Well, on the cattle side, now we have a couple of major reports coming up at the end of this week. How much of the time on the trade this week do you think will be spent getting positioned for that?
I think probably as of Wednesday and Thursday, we'll probably see these markets take definitely a quieter approach. In most cases, that cattle report, that inventory report, the one that comes out every 2 years or every twice a year, normally not a market mover, but certainly going to get the trade excited about its potential implications here for whether we are still in expansion or the size of the expansion we may still be in for the cattle industry.
Yeah, that's a little more rare report than the cattle on feed report. In case anybody missed it the other day, you mentioned what the difference is between those two, between the cattle on feed and that cattle inventory report.
That's right. So the cattle inventory is more or less a survey biannual of the cow-calf sector. It tells us about what the base producer is doing. And this is different than that monthly cattle on feed that we're also going to get on Friday, which is a survey of feedlot activity for the previous month. So we're going to get a great snapshot of both the base producers' long-term intentions as well as the cattle feeders' medium-term supply implications here. So great reports lined up.
All right. Now, on the livestock summary from Friday, we had a little bit of carryover cash cattle trade activity, and it looks like we had anything from 120.50 out in the plains to as much as 121.50 on a live basis here for the cash cattle sales. Looks like rest basis about 188 to 190, we'll call it, and both of those were roughly about steady with what we had before. The choice beef cutout values Friday afternoon, I understand, were down about $0.50 again.
That's exactly right. So definitely getting this market on the cattle side, maybe some stability showing. Let's see if it can get done here as well here for this week. One issue which hasn't got fixed yet, as you mentioned here, is this wholesale beef side. As of right now, without a fix on that side, we would suggest that any stability might be more of a short-term issue for us on the cash cattle end.
And I was looking at an August lean hog chart here this morning, and it looks like it is acquiring that waterfall pattern where it just keeps going down and down and down. But it actually looks like maybe it's trolling around some retracement levels, so we'll have to see if they can get some traction at that level today. Rich, good to visit with you. I appreciate all the comments on the trade. Good stuff. Rich Nelson of Allendale Incorporated in McHenry, Illinois. We'll be talking more with the Allendale folks as we go throughout the day.
Get the day off and running.
You bet.
Thank you very much, Marlon.